Hello and welcome to Earnings Echo. We put together the most important information about MongoDB. Right now, every company on Earth is basically scrambling to build these autonomous AI agents. But here is the multi-billion-dollar question for you listening. Where do those agents actually store their memories?
Exactly. They need a completely modernized data foundation.
Right. So today we are tearing into MongoDB's Q1 fiscal year 2027 results. We need to determine if this whole AI narrative is, translating into tangible financial performance or if it is just hype. Let's get right into the hard numbers. What are we looking at for Q1?
Well, Q1 revenue hit $687.6 million. That is a 25.2% year-over-year increase, and it beat consensus estimates by 3.6%. Non-GAAP earnings per share came in at $1.32, completely crushing the $1.17 estimate.
Okay, so Q1 delivered. But honestly, with legacy databases, my immediate worry is that this is just some one-off spike. Did management actually raise guidance for the rest of the year?
They absolutely did. They raised the full-year fiscal 2027 revenue guidance to a range of $2.92 billion to $2.96 billion.
Wow, okay.
Yeah, and we also saw upward revisions for both EBIT and EPS.
See, this broad outperformance, along with their historical tendency to, sandbag guidance using macroeconomic volatility as an excuse is exactly what drove that strong post-release market sentiment. But let's look under the hood here. Why did these numbers accelerate so aggressively compared to Q1 2026?
The acceleration is attributed directly to Atlas. Their cloud database segment just crossed a $2 billion annualized run rate. That is growing roughly 29% year over year.
To put that $2 billion run rate into perspective for you, MongoDB is generating more revenue from the cloud right now than their entire company did just a few years ago. Atlas is becoming this default choice because it just removes the headache of managing infrastructure.
Which is exactly what development teams rushing to deploy AI actually need right now.
Right, but looking at the balance sheet, I saw that remaining performance obligations, or RPO, jumped an incredible 88% year over year to $1.46 billion. Wait, help me understand that. If they're just locking people into these massive 5-year deals, that 88% number is just a mirage? How are we sure this is actual usage growth?
Because we have to look at current RPO. That is the revenue recognized strictly over the next 12 months. And that figure still grew a massive 69% year over year.
Oh, that is significant.
It really is. And is driven by a 15.5% increase in customers generating over $100,000 in annual recurring revenue. That sits alongside 121% net ARR expansion rate.
See, that 121% net expansion rate is the magic number. It means their land and expand strategy is actually working. Once a company starts using MongoDB for a small project, they inevitably expand it across their entire tech stack within a year. And presumably, this kind of scale is helping the bottom line.
Exactly. Margins expanded significantly. The free cash flow margin actually hit 28.7%.
Let's look at what the market is pricing in right now. For you listening, we utilize a reverse discounted cash flow model in this deep dive. It is not an exact science, but it acts as a very reliable indicator of what future growth expectations are baked into the current stock value.
Right, so applying the reverse DCF at a $395.15 share price, the market implies a 10-year free cash flow compound annual growth rate of 19.8%.
Which sounds high, but is it?
Well, given the current 25% revenue growth
And
those expanding 28.7% free cash flow margins, hitting $3 billion to $4 billion in free cash flow over the next 10 years is highly realistic. They could easily over-deliver against current expectations.
the earnings call tone really reflected that financial reality, too. It was highly confident. CEO CJ Desai specifically highlighted MongoDB as the, quote, memory layer for AI agents. They're also moving aggressively on the public sector front, highlighting the Clarity Business Solutions acquisition to capture U.S. federal workloads.
That federal push is crucial for locking down long-term, high-value contracts.
It is. But let's unpack that memory layer concept. If an AI agent is a chef, the large language model is the chef's brain, but MongoDB is acting as the pantry. The chef cannot cook a custom meal if it doesn't have instant real-time access to fresh ingredients. That is what this memory layer actually provides.
And that functional shift is the core long-term investment story here. MongoDB is successfully transitioning from a scalable document database into a foundational AI data platform.
Here is the core echo for you to take away today. The AI boom is actively accelerating legacy data modernization, turning MongoDB from a system of record into a real-time system of
It is
intelligence.
a massive shift in how enterprise architecture is fundamentally built.
Absolutely. As every enterprise rushes to build these autonomous agents, it raises a critical question for you to consider. Will the databases that hold their long-term memory become the most valuable real estate in software?
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information. It does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.